analyze. So I'm gonna analyze an actual deal that I'm selling right now. It's in Springdale, Arkansas. There's 6 units, so 2 triplexes on the same parcel of land. So it's basically like a 6-unit apartment. Each unit has 3 bedrooms and 2.5 bathrooms with like 1,200 square feet. So it's a huge building, a lot of space. Rents are at $750 per unit. And if you're not familiar with Springdale, Arkansas, it's located in northwest Arkansas, in the area with Bentonville, Arkansas, that has the headquarters of Walmart, and Fayetteville, that has the University of Arkansas. So it's a very popular area, a lot of job growth, a very nice area. Springdale just happens to be one of those areas that rent isn't very high because it doesn't have the University of Arkansas and it doesn't have Walmart headquarters, but it's right in the middle of all that's going on. So a lot of people gravitate towards Springdale for the lower rent. And they're also building an actual hospital there right now. So a lot of job growth is going to be coming to Springdale as well. So this deal is very desirable. But get into the numbers, and this is how I would analyze a property that I'm going to buy or that I'm going to sell. I would get the price, the gross income. I would write out all these numbers and kind of tell if it's a good deal or not. So the price the person is asked for these 6 units is $480,000. It's going to take $96,000 or 20% of that price to buy this deal, which happens to be $96,000. So this isn't for the beginning investor. Maybe you need to partner with someone or a couple people to end up buying this property. A lot of your parents have money sitting in their 401ks. You'll be shocked how much money they have sitting in there not working at all. So they may be interested in investing with you if you were to find a deal like this. Like I said, each unit is getting $750 per unit. One unit is getting $775, so that puts us at $44,525 gross income for all 6 units. Management's going to cost you 10% in this market. So in some markets you may get 8. If you're in a bigger property like 100 units, you may be able to sneak away and get 6 or 5%. But with this deal, it's going to take 10% per month to pay for management. So $452.50. Insurance, this is actually what he's paying for insurance, is $206. Taxes is going to cost you $280 per month. You want to either be putting that in an escrow account or have that taken out automatically, or you need to put it away yourself so you make sure you're able to pay for those taxes. Repairs and maintenance, this building was built in 2004. So like I talk about in my other videos, if it's a newer building, I usually say about 10% per month you need to be putting back for repairs and maintenance. It can be, appliances, it could be flooring, it could be just getting a unit ready to rent after someone moves out. So $450 per month, even if you're not spending that, you need to be putting that back. I usually do a capital expenditure line, which would also be 10%. But on this deal, like I said, is practically new. It's only 14 years old. The roof is pretty much new. Put it on a new roof 4 years ago. AC units are less than 10 years old. So we're talking about a practically new building. I don't see anything happening. And the way you gauge how much you need to put back for capital expenditures, which is a separate line from repairs and maintenance. Capital expenditure, just those bigger ticket items. You want to do your inspection when you're purchasing the property. It probably costs you about $500, and it'll be included in your closing costs when you're buying the property. If the inspection comes back really good and like the big ticket items aren't an issue, they're like those things have a lifespan. Like a roof has a lifespan. HVACs have a lifespan, so you can kind of gauge that when you get your inspection done. So in this property, I know it's in good shape. The bigger ticket items are practically brand new, so I'm not even going to put in the line for it. Your debt service or your mortgage is going to cost you $25.88 per month. So that's a big deal. You need to be adding that into your numbers. In vacancy, so I've talked to property managers in the area. I'm familiar with the Springdale market. 5% is the typical vacancy rate. So $224 per month, I can expect that's how much I'm gonna be vacant. So $224 a month can be like, 10 days out of the month that I'm vacant for the entire 6 units. Now, you may have those months where you have 2 units vacant, but you should be able to fill those pretty quickly since these are newer units. So my net income is $324.50 per month. My projected cash on cash return, which would basically be this $324. You want to times that by 12, so you want to stretch that out for the entire year, and then you want to divide that by this $96,000 down payments, because that's how much you're into the property. So I got a 7.9% return. So now you have to think about, like, what can I do to make this deal make sense to me? Because 7.9% is a pretty decent deal, but how do I either make it a great deal, or how do I cancel this deal off and say this isn't a good deal for me? So the way I can do this is 6 units. So yeah, I want to factor this management fee in, but let's just say that, you know, I think I can manage this myself. I have some experience. You know, I think I can do this myself. You could actually take this management fee out and say, hey, look, if in the future I do want to hire management, I can expect about an 8% return. But if I take this management fee out, now I'm up to a 9.7% return. So now this deal sounds a lot better. A brand new hospital is about to come. I'm getting a 10% return on this deal, which was probably going to boost my rents up, probably, let's just say $25 per unit. Now I'm looking at like an 11% return. Like, now this deal makes a lot of sense. But let's just say I can't manage it. I can only expect a 7.9% return. Could I put down $96,000 myself and wait? Probably not. But if I have some partners, I could probably do this deal, sit there and wait for my cash flow to come in. And basically, when that hospital's built in the areas at its peak, then I'll probably sell this deal at this kind of return after I've raised my rents. So this deal makes a lot of sense. This is a deal I probably wouldn't do because I don't want 6 units. I want to do bigger complexes. Just because there's more scale, I can bring more people in as partners and different things like that. But if you're a newer investor, you got some family members or friends who have some money sitting in their 401k, this may be a good deal for you. So if you're interested in this deal, you can reach out to me at arkansasmultifamilyexpert.com/schedule. I can help you buy this deal, honestly, probably find the partners for you. But yeah, these are the kind of deals that I'm looking at on a daily basis. You need to be doing this like every single day, analyzing properties, figuring out, you know, the different management fees, how much insurance typically costs, vacancy rates. Like, you need to get comfortable analyzing the deal yourself. This probably took me like 5 minutes. So if you're interested in this deal, or you're interested in just learning about real estate, go to arkansasmultifamilyexpert.com. We can get on a call. I can teach you all about real estate for free, charge you anything, and we'll talk soon.